Hey, what's up guys? This is Josh with CPA on Fire, and today we're going to look at how to fill out Form 1120S, which is the tax return for S corporations. Okay, so the only people that would be using this form are people who had made an election to be taxed as an S corporation. So we'll look at the beginning here. You just go over the basic info. Part A wants to know your S election effective date. This will probably be January 1st of whatever year you made the election. Okay, so let's assume that it was for this year. All right, so 1/1/14. Part B wants to know your business activity code. And this is just a code that describes what you do in your business. You can find these online if you Google tax code or business activity codes. There'll be a list of them there for you. There's tons and tons of them, so you'll have to sort through and find yours. If you're using tax software, it's probably going to give you a choice of them. So for now, it's a 6-digit code. We're just going to use the one for other business, which is 999999. All right. So you come up here. They want to know the name of your business. So we'll just use mine as an example. All right, and they want to know your address. This is the address of the business, not your personal address. For a lot of you, that will be one and the same. That's okay. Okay, so 123 X Street, city or town. Okay, so all the basic information there. Box D here, that's your employer identification number. Now, this is not your social security number. This is a separate tax ID number that you have for your business, and you have to have one of these to be an S corporation. So if you never got one, you're probably not an S corporation. It'll be a 9-digit number, 2 digits, a dash, and then 7 more. Okay, so you need to know what that number is. The date incorporated. So this is when you became either a corporation or an LLC. Okay, so you had to do that before you became an S corporation. You can find that in your articles of organization or whatever you use to set up your corporation or LLC. So we'll just assume that it was on the same day. 7/14. Total assets. Don't worry about this line for now. You'll find out if you need to do that or not. We'll talk about that here shortly. Okay, so we'll get on to box G here, or line G. Is a corporation electing to be an S corporation beginning with this tax year? So if this is your first time filing an 1120S and you never filed the Form 2553 that you were supposed to file, click yes, okay? Otherwise, click no. Line H. Check if 1, it's your final return. So that would be if your business was going out of business. This was the last year that you had to file a tax return. You're going to click that. Click box 2 if you had a name change during the current year. 3 if you had an address change. 4 if this is an amended return. So if you already filed your return and you're just making changes to it now. And 5 if the S election termination or revocation. Okay, so if this is your last year just filing as an S corporation. Okay, so that's the basics there. Then we get down to the fun stuff here, the actual tax information. So line 1, they want to know your gross receipts or sales. What this number is just the revenue you took in before any expenses. So the exact amount that your customers paid you. Okay, so if you made $150,000 for the year, that's where that goes. And you always round up or round down to the nearest dollar. So under 50 cents, go down, over 50 cents, go up. You never have to put change on your tax return. So 1B, any returns or allowances. So if you had to make any returns to customers after they purchased. So we'll say 5,000 there. And then 1C, the final number here. So after you subtract the gross receipts minus the returns, you get 145,000. Okay. So line 2, cost of goods sold. This is the cost that you incurred to create the product or service that you sold. Okay. So this is usually for people who sell a product. So let's say that you sell tires. Okay. You had to buy those tires for a price. That price goes into cost of goods sold. So let's say you bought tires for $50, sold them for $100. Your cost of goods sold is that $50. If you're a service company, there's a chance you'll have something here, but usually you don't have anything in cost of goods sold. So we'll leave that blank for now. All right, your gross profit, you're just going to subtract line 2 from line 1C. So subtract the cost of goods sold from your gross receipts. Okay, so still 145 for us in this case. All right, net gain or loss from Form 4797. This is where it gets a little tricky. This is if you sold an asset. So let's say you had machinery that you sold or something that you were depreciating in the past that you then sold. You could have a gain or loss from that, and you're going to report it here. This is why I always recommend using a CPA to do this and not do it yourself. But if you don't have anything on line 4, then don't worry about it. We're not going to put anything here. Line 5 is other income. So usually this is if you have a business bank account and you had some interest coming from it. Possibly if you had rental income. Generally, your rental income should not be on an SCorp. You don't want to have rental income reported in an SCorp. It takes away the advantages. So for now, let's just assume that's just interest income and we don't have any. Then you just get to line 6, which is your total income. All right, so compensation of officers, line 7. As an S corporation, you have to pay yourself, if you're an owner, a salary, okay? So it doesn't matter if you have no other employees, you have to pay yourself that salary. That's part of how the IRS makes some of their money back for the tax breaks you get as an S corp. So you're going to take the salary you paid yourself and any other owners in the company or officers in the company. You're going to put that here. So most of you probably are sole proprietors. You're the only person in your business. You're solopreneurs. So we're just going to assume that you only paid yourself and that you paid yourself a salary of $40,000. Okay. Line 8 would be salaries and wages. So this is if you had any other employees who weren't officers or owners in the company. We're going to say you had none here. Repairs and maintenance. So anything that you had done to your property, business assets. Let's say you had machinery again, and you spent $1,000 to get it repaired. Okay, that would go in line 9. Line 10 is bad debts. So this would be if you did the work for someone and they never paid you. Okay, so you listed it as income, but then they never paid you. You can write that off as bad debt. So let's say in 2013, you did work for someone, they never paid you, you counted it as income. Come in 2014, you realize you're never going to collect it, write it off here as bad debt. Line 11 would be rents. So if you have an office space, anything that you rent, it could be machinery, equipment, or like a building or property. Okay, so that's going to go in line 11. Let's say you had $10,000 for the year in rent. That's $100,000. Okay, $10,000 for the year in rent. Line 12, any taxes or licenses. So this would have your payroll taxes. So since you're paying yourself a salary, you do have payroll taxes. It could also be any property taxes you might have, sales taxes if you're selling actual products, and then licenses. So if you're like for example, as a CPA, I have license fees to keep my CPA license. So that would go in box 12. So let's say you had $1,000 for the year there. Interest, if you had to pay any interest on any loans, that would go there. Line 14, depreciation not claimed in cost of goods sold, basically. So if you have any depreciation, if you have assets that you're depreciating, you're probably going to report that on line 14 here. And again, this is something that gets a little tricky. If you have things you're depreciating, you probably should not be filling this out yourself. So we're going to ignore that one for now. Depletion, same type thing, different form of depreciation for, it says not to deduct oil and gas depletion, but that's typically where you see depletion is in oil and gas wells. So we'll ignore that. 99% of you won't have anything with that. Line 16, advertising, pretty self-explanatory if you had to spend any money to advertise. The big one now, obviously, Facebook ads, YouTube ads, Twitter ads. Maybe you're still doing yellow page ads, anything that you're spending, business cards, anything like that that you're spending money on to get your name out there. So we'll see you had $1,000 there. All right, pension or profit sharing plans. This is if you have, obviously, a pension or profit sharing plan for your employees. You probably won't have anything with this if you are the sole employee in your business. So we'll ignore that. Same thing with employee benefit programs. Chances are you won't have anything with that if you're the only employee. Okay, other deductions, and you typically are going to attach a statement there. Okay, so you're going to list those out. So any expenses in your business that don't fall into the categories we've already talked about, they're going to go in this other deductions. So you can write in there cell phone, put that as an other expense, internet, office expense, any insurance, anything that you spent money on in your business that wasn't listed already is going to go there. Meals and entertainment, that 50% you can deduct, is going to go in there. When you're using tax software, it's going to make this much easier for you. It's going to pull up a thing that you can list these out. It's going to ask specifically for some of them. So again, I don't recommend filling this form out by hand, but if you're here, you're giving it a try, and that's what you got to do. Okay, so we'll say that you had $5,000 in other expenses. So then you look at your total deductions, right? So you had $40,000 in officer compensation. You had another $10,000 in rent, so $50,000, $1,000 in interest, $51,000, $1,000 in advertising, $52,000, and $5,000 in other deductions. So $57,000 total in other deductions. And total deductions. So then your ordinary business income, you're going to subtract line 20 from line 6. So you're going to come up here, you're going to take that $145,000, all right, and you're going to subtract that $57,000. So for, in this case, it's going to bring us to a net income of $88,000, which I think my math is correct there. So your total net income, the income that's going to flow through to you on your personal tax return is going to be $88,000. All right, so now we're going to get down to even more confusing items here. This 22A, excessive net passive income or LIFO recapture tax. If you have to fill that out, you're not going to be filling this out by yourself, okay? So don't worry about that. Tax from Schedule D, same thing. If you have something coming from there, you're probably not filling out this form by hand. Don't worry about it. 2013 estimated tax payments in 2012 overpayment credited to 2013. Don't worry about that. Most of you, 99% of you, again, won't have to worry about that. You pay your taxes on your personal tax return, so that's not what this is talking about here. Estimated tax penalty, again, this is not going to apply to you because you are going to pay them on your personal tax return. All right, so 99% of you ignore this box here that says tax and payments. Go down to the bottom here. You want the signature of the officer, which is you, date, title, so president, owner, CEO, founder, whatever you call yourself. May the IRS discuss this return with the preparer shown below. If you're having me or someone else prepare your return, we can click yes or no whether you want them to call us. This paid preparer use only. This only gets filled out if someone's preparing your tax return, in which case you probably don't need to watch this video. Unless you're just getting an idea of what goes on this return, which is still a good idea, by the way. So even if you're going to have me or another CPA fill this out, it's still a good idea to go through this video so you know what he's looking for on your return, okay? So then we're going to go to page 2, and this is where we're going to have to check some boxes, go over some basic information on the company. So check the accounting method. Most of you will be cash payers, unless you've specifically elected to be an accrual basis. Okay, so cash basis just means that you recognize income and revenue when it's received. So you don't recognize revenue until someone actually pays you. If you have accounts receivable, someone doesn't pay you for 90 days, you don't count it as income until they actually pay you. The accrual method means that you count it as income as soon as you perform the service or sell the product, right? So if I prepare your tax return, you don't pay me for 3 months. If I'm on the accrual method, then I count that as income as soon as I do the tax return. So most of you, like I said, will be cash basis. So we'll go ahead and click that. Business activity. So this is where you're going to kind of list what you do. So for me, that'd be tax prep. For you, going back to our example, it might be tire sales. You're going to list whether you're a product or service company. So in this case, it's a service. Line 3, anytime during the tax year was any shareholder of the corporation a disregarded entity, a trust, an estate, or a nominee or similar person. So again, we're going to talk to 99% of you. If you're filling this out, you probably don't have any of those, and you're going to say no. Okay. Box 4, at the end of the tax year, did the corporation own directly 20% or more, or own directly or indirectly 50% or more of the total stock issued and outstanding of any foreign or domestic corporation? So did this company own 20% or more of another company? Again, 99% of you, the answer is no. B, own directly an interest of 20% or more, or own directly or indirectly an interest of 50% or more in the profit or loss of or capital of any foreign or domestic partnership. Again, same thing. If you had interest of 20% or more in a partnership, you're going to have to click yes. 99% of you, the answer is going to be no. 5, at the end of the tax year, did the corporation have any outstanding shares of restricted stock? I'm just going to go ahead and say most of you that's going to be no. 5B, at the end of the tax year, did the corporation have any outstanding stock options, warrants, or similar instruments? Again, not going to apply to most of you, no. 6, has this corporation filed or is it required to file Form 8918 Material Advisor Disclosure Statement to provide information on any reportable transaction? Same answer here, not going to apply to you guys if you're doing this yourself, no. It's not one to click there. Box 7. Check this box if the corporation issued publicly offered debt instruments with original issue discount. Not going to apply to you guys. Don't check it. 8. If the corporation was a C corporation before it elected to be an S corporation, or the corporation acquired an asset with a basis determined by reference to the basis of the asset in the hands of a C corporation and has net unrealized built-in gain. Okay, so I'm going to stop reading here. If this applies to you, don't do this yourself. Basically what it's saying is if you were a C corporation before and you had built-in earnings, you're going to have to do something special on this tax return. So if this applies to you, go see a CPA. Do not do this yourself. 9, enter the accumulated earnings and profits of the corporation at the end of the tax year. So if you're doing this in tax software, it's going to pull through automatically. If not, you're just going to enter your profits at the end of the tax year. So I think we said 88,000 here. 10, does the corporation satisfy both of the following conditions? Okay, let me tell you why this line is important. This line is important is because if you can say yes to both A and B here, you do not have to put a balance sheet on your tax return, which is going to save you a lot of time. Most of you, quite frankly, are probably not keeping track of a balance sheet. So you definitely want to pay attention here. So line A, the corporation's total receipts for the tax year were less than $250,000. So if your total gross income before expenses was less than $250,000, you can say yes to that. Line B, if the corporation's total assets at the end of the tax year were less than $250,000. So if your assets that you're depreciating, your equipment, your vehicles you have in there, machinery, anything like that, if that's less than $250,000, you can click yes to that. If you meet both of those requirements, you do not have to put a balance sheet on your tax return, which again is a big time saver for you, a big headache saver. So line 11, during the tax year, did the corporation have any non-shareholder debt that was canceled, forgiven, or had the terms modified so as to reduce the principal amount of debt? So basically, did you have any debt modified or forgiven? Did you have any property that was foreclosed on? Did you have credit cards that you couldn't pay that they either reduced the amount or just got rid of altogether? If the answer is yes, click yes. If not, click no. Line 12, during the tax year, was a qualified subchapter S subsidiary election terminated or revoked? So did the IRS, did you either terminate your S corporation election or did the IRS revoke it? Probably the answer is no. 13A, did the corporation make any payments in 2013 that would require it to file Form 1099? So did you have any independent contractors that you paid $600 or more to? If the answer to that is yes, you click yes here. Now if the answer to the 13A is yes, the answer to 13B should be yes. So all they're saying here is if you were required to file them, did you? Okay, so please don't click yes above and then click no here. You're just pretty much guaranteeing yourself a penalty. If you need to file 1099s, file them. If you don't, click no here. Okay, so the Schedule K. This is, again, why it's hard to fill this out yourself. If you fill it out yourself with no tax software, you're going to have to fill this out all individually. You're going to have to do it yourself. If you're using tax software, it's going to pull through automatically for you. Okay, so your ordinary business income or loss, which is going to be that $88,000, it's going to pull through there. Okay, line 2 is going to ask for your net rental real estate income. So if you have rental properties, those didn't get reported on that page we showed. There's a separate form, 8825, that you're going to report that on, and it's going to pull through here. Now let me just say this, if you have rental properties, they should not be in an S corporation. So we're going to assume that is 0. Okay. Line 3, other gross rental income, again, should not have that. More rental income stuff should not have it. Interest income, we said 0 if you had a bank account. Dividends, if you have any investments with your company bank account that you receive dividends on, you report them on 5A and B, ordinary and qualified dividends. Royalties, if you have any oil or gas wells that you receive royalties on, or if you sell books that you receive royalties on, any royalties you receive is going to go on line 6. Short-term capital gain. So again, this is if you sell assets, and you shouldn't be doing this yourself if you sold assets. So we're going to ignore 7 and 8. Net section 1231 gain, same thing. If you have something there from form 4797, do not attempt to fill this out yourself. So we're going to say nothing. Other income or loss, interest income, like I said, biggest one. We show nothing there. Okay, section 179 deduction. So this is a form of depreciation, accelerated depreciation. It's something, again, you don't want to do yourself. So we're going to say nothing. Assuming that you're filling this out yourself, you're not going to have anything. Charitable contributions. Did your business make any charitable contributions? If so, they're going to come through here. Investment interest expense. If you had any investments that you had to pay interest on, that's going to go here. Section 59E2 expenditures. Don't worry about that. If you have it, you're not doing this yourself. And any other deductions. Nothing you're going to list there. All right, 13. Again, if anything applies to you here, you either 1 should not be an S corporation or 2 should not be filling this out yourself. So ignore 13. Name of country or U.S. possession. So if you had anything else other than, if you had any foreign sources of income, put it here. You shouldn't have anything if you're doing this yourself. 15A, this is for alternative minimum tax. Don't worry about this. Items affecting shareholder basis. So if you had tax exempt interest income, so from like municipal bonds that you're invested in through the company, other tax exempt income, non-deductible expenses, so things like 50% of your meals. So if you had $1,000 in meals and entertainment, 500 of it would go here as non-deductible expenses. Distributions, so money you took out of the company, not counting your payroll. Okay, so we said you paid yourself $40,000 a year. If you took another $20,000 out of the company, those would be considered distributions. Repayment of loans from shareholders. So if you issued yourself a loan from the company and you repaid it, going to go on line 16E. Shareholders pro rata share. Okay, so this is, we're going to get to Schedule L here. So let's do Schedule K first. Finish up. 17A, investment income, investment expenses. So this is if you had any, if you're invested in like stocks, bonds, anything like that within your company. So 18, income or loss reconciliation. So you're going to combine the amounts on lines 1 through 10 in the far right column. From the result, subtract this sum of the amounts, and so you're taking your income and subtracting all the expenses, and it's going to get you to that total number we already figured out, 88,000. Okay, so this is Schedule L. This is the balance sheet. This is what you do not have to worry about if you meet those requirements we talked about. Under $250,000 in gross revenue, under $250,000 in assets. So if you do have to fill this out, it's a little bit of a pain. You're going to have to do both last year's and this year's numbers for it. You can go down through here. We're not going to go through them all. We're going to assume most of you don't have to do that. But feel free to email me if you do have questions on that, and I can go through that with you. Again, this part you don't have to fill out if you met those requirements. Alright, so that brings us to the end of that. The other thing you will have to fill out, which is not showing up on this 1120S, you're going to have to fill out what they call a K1, which is where you're going to put all your personal information in there. So you're going to have to put in your name, your social security number, your address, and then it's going to, what that's going to do is pull all the numbers that apply to you personally, and you're going to report that form on your personal tax return. Okay, so we can do another video going over that, but for now, this is how you fill out the 1120S. Hopefully that answers most of the questions you have as you go through it yourself. As always, feel free to contact me with any questions, cpajdb@gmail.com, or just check out our website, cpajdb.com. All right, thanks guys.